For decades, the United States has been seen as the world's financial leader. The dollar was king and the American economy was the benchmark. But it looks like things could be changing. I'll show you what I mean. First, the United States' credit rating has been downgraded by S&P, Fitch, and most recently, Moody's. Now, the United States still has a great credit rating. But when your credit rating falls, it means the world trusts you a little bit less to pay back your debt. Number two, global debt fears are rising because our national debt is approaching $37 trillion. To put that in perspective, last year our national debt grew by around $4.5 billion a day. That's a little over $188 million an hour, or let's just keep it simple, $52,000 a second. That pause you just took cost $100,000. And then of course we have number three, trade uncertainty. The United States economy is changing a lot with these tariffs, and we don't know what's going to happen with these tariffs. Either these tariffs are going to strengthen the United States economy or they're going to hurt the United States economy. And everybody has a prediction, but we really don't know. But what we do know is when we add these three things up, the credit downgrades of the United States, plus the growing national debt, plus the trade uncertainty, with the fact that more and more countries are trying to distance themselves from the United States dollar, it looks like things are changing. And this change is what has global investors starting to feel nervous, which brings us to the question, is America still the benchmark, or is the world starting to look elsewhere? Starting with how we got here. After World War II, much of the world was rebuilding while the American economy was booming. This created the perfect opportunity for America to now lead the world in global finance. And in 1944, 44 countries met in Bretton Woods, New Hampshire, to create a new global financial system led by the United States dollar. This Bretton Woods agreement said that the United States dollar is now going to be king, and they pegged their currencies to the United States dollar, which was backed by physical gold, which at that time was $35 an ounce. So you can compare that to today, where gold is well over $3,000 an ounce. So now paint this picture. The United States dollar is the new world's reserve currency. Countries around the world are pegging their currencies to the United States dollar, and everybody's looking to America as the financial hub of the world. And now the American economy starts to boom because your currency is so strong. And by 1960, the United States economy made up about 40% of the world's GDP. That means the United States was almost half the world's economy. Compare that to today, where the United States is about 26% of the world's economy. But the real benefit of being the world's reserve currency is that a lot of global trade is happening through the United States dollar, which strengthens the United States dollar, and you're going to value commodities like oil in the United States dollar. So when countries want to buy oil, and everybody needs oil, they have to price it in the dollar, which gives more energy, strength, and support to the United States dollar. And this is where now we're starting to see some changes happen. By the way, we cover a lot of this in Market Briefs. Market Briefs, again, is my free financial newsletter where every day my team is working to break down what's happening in things like the economy, housing, stocks, crypto, and the global economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every morning. Plus, when you join Market Briefs, you'll also get my investing masterclass as a bonus for free, where I go over how you can start investing and how you can find hidden investment opportunities by staying ahead of market trends. So if you want to join Market Briefs and get my investing masterclass all for free, all you have to do is click the link down in the description below. There's 4 changes happening that I want you to pay attention to. Number 1, the United States dollar has been dropping in value. In the beginning part of 2025, the United States dollar index fell by 9%, which is the biggest drop that we've seen since 1995. This by itself is not something you should be losing sleep over, but I want you to understand this in context with everything else. By the way, in case you were wondering, a weaker dollar means buying things from foreign countries becomes more expensive. The second thing you want to pay attention to is our national debt, which is now approaching $37 trillion. And I know it's just a big random number that people throw out there, but the thing you want to pay attention to is as our national debt is growing, our interest payments as a government are also growing as well, because the United States government has to pay interest in all of this debt, and the fastest growing expense for the United States government is not the military, it's not healthcare, it's not infrastructure, it's interest. payments. In other words, more of your tax dollars are being used to pay back debts instead of actually providing you more services. Number 3 is the credit downgrades, because now we've seen Fitch, S&P, and Moody's downgrade the United States. Now, this doesn't mean that the United States is about to default. What a lower credit rating does mean is that the United States could be paying higher costs, meaning higher interest rates, in order to borrow more money. And we know that the United States loves debt, and they're continuing to rack up their debt. And so if we go deeper into debt, now borrowing more money can become more expensive if we have a lower credit rating, which means even more of your tax dollars could be used to pay back interest or future interest. And of course, number 4 is the trade uncertainty that I talked about in the beginning of the video. Now, we don't know what tariffs are going to do for our economy, and I'm not here trying to predict what's going to happen, but what we do know is that it creates uncertainty. And either these tariffs can strengthen the United States economy or they can weaken the United States economy. We don't know what's going to happen, but they are creating uncertainty today, which has some global investors nervous. And the reason I want you to pay attention to this is because investors and countries around the world are paying attention, and we're starting to see changes happen. For example, central banks around the world are now trying to hedge their currencies against the United States dollar by buying physical gold. We are seeing record amounts of central banks buying physical gold to potentially strengthen their own currencies just in case the dollar becomes weaker. Number 2, countries are trying to trade not in the dollar, but in their own local currencies. Remember what I said a few minutes ago, that one of the perks of being the world's reserve currency is that a lot of global trade happens through your currency? Well, we're starting to see more countries try to trade not in the United States dollar. For example, China and Brazil came to an agreement saying that they're going to trade not in the dollar, but in their own currencies. And in 2024, the euro was no longer the second most traded currency, it was the Chinese yuan. Why does this matter? Because if less countries are relying on the United States dollar to trade, that gives less power to the United States dollar. Number 3, the BRICS nations are exploring their own new currency. The BRICS nations are Brazil, Russia, India, China, and South Africa, and they've very openly been discussing creating a new currency to try to end the United States dollar's dominance. Now, this used to be more of a conspiracy theory thing, but now it's become much more apparent and open because the BRICS countries have open conferences talking about how they want to de-dollarize and get away from the United States dollar because they don't want to see the United States dollar being the world reserve currency. And then we have number 4, China. Now, if you've been paying attention to the financial news at all or reading market briefs, you know that the United States has an interesting relationship with China, from tariffs to trade wars to a lot of other things. And the other part that you want to pay attention to is that China is one of the largest holders of United States dollars, which is good because that means if there's more buyers of United States dollars, that helps strengthen the value of that currency. But recently, China has actually been getting rid of the United States dollars. They've been selling them off. As of March 2025, the reported holdings of United States treasuries by China has fallen. So China is no longer the second largest holder of United States dollars. They're the third largest holder of United States dollars because they've been selling some of them over the years. So what does this mean for you? Well, if we do happen to see a weaker dollar, then buying things from foreign countries can become more expensive. If we continue to see higher interest rates, well, that could make borrowing money through a mortgage or a credit card or a car loan or a business loan more expensive as well. And if we do happen to see more of an economic slowdown, that could slow down the economy, slow down the job market, and increase unemployment. But we don't know. Not to mention that there's a lot of X factors with the Trump presidency because President Trump has been very aggressive to change our economy. And again, we don't know if it's going to be for the better or if it's going to be for the worse. You have some people that are saying that his policies are going to very much strengthen the economy and bring it back to being a world leader. Other people are saying that it's going to hurt. I'm not here to predict. I'm here to help you understand what's going on because everybody else on the internet is talking politics. I want you to understand the finances, that way we can take better care of your money. But at the end of the day, regardless of what happens, you want to make sure you're taking care of your own house. And the way that you do that is by, number 1, understanding what's happening. Number 2, not get emotional. Number 3, be an investor. Period. We know that no matter what happens, there's going to be opportunity. Period. Wall Street is going to get rich no matter what happens. I want you to be one of the people that can capitalize on opportunities. The way you do that is by number one, not spending all of your money. Number two, you take some of that extra money that you did not spend and now you invest it. And you gotta remember, investing is risky. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But the way you build wealth is about becoming an investor. And this is where the more financial education you have, the better the investments that you can make. And yes, you don't have to get all involved with your investments. You can just be a passive investor, invest your money into the markets, and you can still see success. But if you want to be a little bit more involved, which you might be, especially if you're watching this video, this is where your research becomes very valuable to stay ahead of what's changing in the economy. That way you can find new and unique investment opportunities. By the way, when you sign up for Market Briefs and you get the Investing Masterclass, this is one of the things that I talk about. But this is where the more research you do, the better you can stay ahead of shifts that are happening in the markets. But I don't want you to panic. I don't want you to freak out. I want you to understand what's happening. That way you can capitalize on changes that are happening around you. If you have $100 in your bank account and you want to buy this $1,000 Gucci scarf, your bank would love to lend you the $900 at 25% APR, because when you make the minimum monthly payments, your banker gets richer. But that's just the beginning. When it's time for you to buy a house, who do you ask? How big of a house should I buy? Many times it's your banker, and they're not your financial